All right, so we're recording. Today is June 12th, 2026, and we have a couple of people on our Discord and the Learning channel. So, we're going to talk about ranges today, and ranges are really important. It might sound really simple. It might sound like, hey, you guys all heard words about it, right? But how do we do that in this channel? Well, this channel particularly, what do we describe a range, right? When we do a box, right? When we see a box, can anyone tell me what this box would mean without all the candlesticks in there? What's the upper limit here? Anyone?
Like that's the high of the day, or the premium and the discount.
Right. So this is the premium and this is the discount, right? So, and this is the equilibrium, right? So we separate that every day, right? For a previous day, we have previous day high, low, and equilibrium, right? There's a weekly high, low, equilibrium, and there are mid-session day high, low equilibriums, right? So when we're looking at, like, let's say how candles move, right, from one day to the next, you're gonna see it kind of break and come back down, then break and come back down, and then break and come back down within that premium discount, right? And this is what it does every day, right? But the goal of it is, hey, where are we going to take our trades in this whole entire nonsense of things? Okay. So when we're looking at things, we want to look at, of course, the breaks of this range. We want to look at the equilibriums and how it responds. And when it falls below the equilibrium, where it responds when it touches the equilibrium and back down to the low, right? So if we take all this stuff that we have here, right, and we kind of like move it towards our chart down here, right? Move it towards our chart, just as an example, okay? And we look at our range. We look at our range from, let's say, Monday into Wednesday. All right, so this is Wednesday, this is Monday, right? And sorry, let me move this around. Okay. Now, if we look at Sunday, Monday, Tuesday, it develops a range, right? But that's one range of the start of the week. But let's look at the overall, where the top and the bottom is from here to here. You guys see where the top is right here? Yes? And where the bottom is right here? Yes? Let's
Yeah.
develop that. Let's take a look at that entirely. And keeping this kind of like structure in mind. Okay. I'll put this somewhere up here. So keeping this structure in mind, right? We understand that here's the premium, here's the discount, right? And it falls from premium, and you see where the equilibrium is, right? What happens? There's a kind of reaction there, right? And then falls into the discount, right? Over on Friday. And Friday was a huge day because Friday, as soon as it broke there, we understood that it was going to break more, but there's another range for that as well. But let's determine from the high and low, we have this huge range that we have to deal with, right? And we'll just move it aside throughout Monday and Tuesday and Wednesday. Okay. What happens when that low is created on Sunday into Friday's evening, right? Sunday opens, Monday happens. We understand that, hey, it's going to want to react, right? It wants to go somewhere. Where entirely on Monday? Where is it almost try to get to? Anyone?
Equilibrium.
Right. So, but that doesn't also mean that, hey, this should be where we also all look, we should also encapsulate other premium and discounts into our theory as well, right? So if we do that, and we understand that, hey, there is our premium discount, high and low, here's our encapsulated premium and discount, correct? So if we're looking at that, there's another premium discount. Okay. What happens? From our high and low, we understand that from Sunday into Monday, right? Monday's tricycle equilibrium establishes another range, right? In this case, here. Okay. What happens, right? Over Monday into Tuesday, like close of Tuesday, it tries to go where? The equilibrium, right? How would you trade this? At 6 o'clock, it attempts to move out of the equilibrium into the premium, right? You want it to, like, in the earlier marks, in the 15-minute mark, let's go there. On Monday. Right, 9 o'clock happens, right? And 9 o'clock, our range is here, because we don't know this yet, right? 9 o'clock, 9:30 happens. It already is mostly above where? That equilibrium, correct? We have 2 BBs here, fair value gap. So we understand that premium, when it's above the premium, it's going to try to reach higher, right? When it's already past the equilibrium, right? So if we understand that there's a range that gets developed before that 9 o'clock area, we shouldn't, be patient, right? And see that if it starts responding to this area, BB, fair value gap here, and starts going up, our trade should be this into the highs here, where we take our profit. Once it makes a new range, the next day should respond. It should kind of go back down to where the equilibrium is. Correct? So if you understand that, what happens? Equilibrium's here. This is where we're going to start taking trades if it pumps up a little bit, right? So this is midnight. We don't have to worry about it. 2 a.m. Sure, okay. 10 p.m. Sure, okay. But what happens? Since that range is there, and this is Tuesday, why it's a great example on taking this trade because of range, it goes where? Where is this? The exact premium and equilibrium of the higher range. So what does that mean? We look to see that in it's 2 points of interest, POIs, that we're looking for: equilibrium in the higher range and the previous day high of the previous day, right? Like, so those are 2 things that we have to look for. As soon as it reacts to that, what do we see? We see a huge reaction, a huge, wick here that we notice. So, like, for me, right? Who just jumped in? Jacob. Hey, Jacob. Congratulations on passing, brother. So if we see this, right? This is our trade. This is exactly where I took the trade that day. Why? POI is there, high is there, and it shot down. Huge wick. Take the trade. My stop loss was just at the top of the wick. It wasn't much. It was, I think, $400 on a mini, right? And where did it take you? Where did we expect it to go? At least to the low of the range. How much is that? Right? Even if you got in here and this candle, that's 891 points. I don't think I wrote it that long. But that's over 16K on one mini, I'm sorry. Am I losing anyone here? Because no one's talking. No one's asking questions. I just want to make sure.
No, but I just feel like, I always feel so voila, right? But okay, so it's Tuesday, you're seeing the prices above, you've got this new range.
Right. Mm-hmm.
right? And what's the mindset on the new range too? Like, oh, I understand. Like, okay, you're taking like it's Monday morning, and you're taking like the current high and the current low, right, in
Mm-hmm.
that bigger box.
Mm-hmm.
And then I'm just like, when are you like, oh, there's a new range
So
that's forming?
so let's say we don't even have this. Let's say we go back to Monday entirely, right? And we don't know what's going to develop. Let's go back to all the way to back to Monday at 8 o'clock, right? Let's go back there, and let me leave this and go all the way back to hold on, Monday. Okay. Let's say we have no idea. We just know the big range, A to B, right? All right. Well, what we know is price is at discount of the range, right? So this whole entire area from here to here is our discount. What happens? It already met the low. It made a low, right?
Mm.
It made a low. Where's that other low? It stretches all the way back here. It already made the low. And there's a huge reaction. If it already passed, let's say we divide this, right? This is just shapes and figures. I think all of us can figure out from kindergarten shapes and figures, right? So if we, and this is not to be derogatory. I hope it didn't sound that way. I'm just saying, let's just take it very rudimentary, right? Shapes and figures, right? If we're looking at it, okay, we see from the low, it already passed the equilibrium of this discount.
Mm.
Anyone not understand where I'm getting this? Anyone lost? Please say something. Right? So, breaking it down, right? Discount, premium, another PD array or PD range here in this premium discount. So, it's already past the equilibrium of this range. So, it's the premium in this discount.
Okay. Yeah.
So what we're expecting is at least, right, for it to head up to here. So our POI is here, right? At least. Will it
You're
do it?
waiting patiently until it reaches that.
Correct.
That's
Correct.
there, and then you wait to see some type of reaction.
Right. Right. Because you're going to have a better result by waiting to see what reaction happens. And I think Ray has been practicing this a lot, waiting for the reaction, not trading until seeing the reaction, which is why I had to go back to this, because I stopped doing that in the course of a year and a half after I lost all my accounts. I started YOLOing, and I'm like, wait, I at one point I didn't lose a trade for 8.5 months. What changed? What was this beforehand, right? And I'm trying to remember this aspect that kind of, hey, order blocks is great, fair value gaps are great, what have you. But rudimentary things like this have to be explored, right? They have to be understood. If you understand that, all right, hey, it's already in the premium, it's 7 o'clock. And we know, all right, that 9:30, this line right here is 9:30. I want to see a reaction either where A, it goes back into this equilibrium and then shows us something else, or automatically hits this up here, right, the equilibrium there. Right, so let's
Yeah, this is like early morning. It's about to open.
Yeah.
This is what we're looking at.
Yeah,
okay.
we're building our blocks, right? So,
Right.
let's see. Yeah, go ahead. What's up, man?
And I'm sure others have the same problem. We get a little lost in mechanics.
Mm-hmm.
So you've already mapped out your box by looking at the previous day's highs and lows, and we can
Not even
clearly
the previous
see
day highs
on
or
the
lows.
chart
Not even.
what the highs and the
No,
lows
no.
are.
Not even. I want to go from like an overall thing. Where was the last high? What was the high And then there's this huge jump. Where's the low?
Right.
Just draw a box.
And
No, I know that, but I'm saying, but then what I was going to say is once you know your box, your big box, then you're then to kind of zoom into the more immediate action. You're boxing the lower box. You're
Yeah.
creating.
So
You're kind of zooming in on the action.
yeah, so you're there. It's just that you have to remember, premium discount isn't just one big thing. It's a big thing with another thing inside, with maybe another thing inside, right? It's like those Russian figurines or the Ukrainian figurines where one little thing is inside another small, a bigger thing, right? So we're encapsulating it so that we can understand it, right? So for us to understand it, you have to understand where price has been, right? And instead, like, you know, the way people used to do it is they just used to draw lines, like these stupid lines here is an understanding, but it doesn't show you the whole picture. The whole picture is the market already moved down, right? We're in the discount, right? But then everyone gets lost in sauce. Well, we're in the discount. Where is it going to go? Midnight open? This, blah, blah, blah. Okay, relax. Use that as your POI, but let's make it so kindergartenish, so rudimentary that, like, you can just see it. Right? Let's not make it with like so many words and figurines like fair value gap, order blocks, like volume imbalance, this and this. Who cares?
Right.
Just look at the image.
It's basically to find direction. Basically.
Find the direction, right?
So
when you know where it's going, you can take trades late. You can, but you'll have a bigger and better understanding of where it's going to head. Right, so let's take a look. Let's stop for a second and take a look at what I'm showing you. Right, so we understand that 930 is here, correct? So we understand 930 is. What's our reaction? Like, oh man, I guarantee you, all of you are going to be like, well, it's going to go up. It's going to go up because it's already going up, right? But that's not what we should think. We should think that we have two places of action where A, right? Let me erase this one. So it'll be A or B. That's it. Those are the two places of reaction that we have to look for. Okay? Simple.
Being conscious of time and what time slot you're in.
Whoops, that's not it.
In our trading hours.
Right. So that's not it. I'm sorry. This is the equilibrium. Even I got confused for a second. So A or B. You only have two choices. A or B. How simple is that? Don't worry about taking it in the middle. Don't worry if it goes down or goes up. Don't worry about it. Who cares? Does it go up automatically? Great. Where do you care about it? In A or B? Okay. So let's play it.
I want to see if the next few candles would show anything like a volume imbalance or a value gap.
Who cares? Who cares? Who cares? Don't even bother with it. Don't even bother with imbalance. Don't even bother with a fair value gap. Where is your view? What did I just say? A or B? I don't care where it goes.
And I like it because it helps me be patient, or it helps me feel calmer while the candles are forming. You know,
you're not caught up in this nonsense of 50 points, 100 points. You're not caught up there. A or B, right? And who knows what time it'll hit? Who knows? But let's take a look at it. Right? So here, it doesn't hit it. But what? This is our POI, this is our fair value gap, and it tells us where it wants to go. Say that you're late for it. Okay. B. You wait for this part.
So you're basically saying that, like, if we didn't take the trade after that black candle, that you definitely didn't miss anything.
Right.
So you're plenty, but...
What I've been doing is waiting for, like, you see how those black candles is down and almost equilibrium?
Say it again.
Like once though, you see where the black candles almost hit equilibrium, but it didn't touch it. Right?
Yeah.
And then the blue candles engulfed those down candles. You could take a trade there. That's what's been helping me. Okay. But like you said, I would wait. Yeah. I would wait for the perimeters to get hit first. Because it could chop you up there.
But this is like something that you have to not be conscious of. Like a lot of people are going to be like, let's look at this candle. Let's look at that candle.
Mm-hmm.
Like, I'm telling you, don't care about the candle. It's counterintuitive. Don't care about the candle. Care about the position. Where is the position? It automatically replies, okay, and you see a long wick, equilibrium is there, enter. And leave your stop loss here. Short. Oh, here's my equilibrium, but here's the reply. It comes back up. It comes back down. I don't know what to do. Put your trade here. Stop loss there. You make your money. Understand? Like it doesn't have to be exact, but you have to understand where is that reply close to where we want to see, A or B, right? Close to where we want to be. Here's the reply. Even if you get in late, you still have 100 points, 200 points there. Oh, you get in late, you still have 200, 300 points here. But
yeah, I had success when you first showed me this. You were like, all right, on the 15-minute, we're looking. You go to the 5-minute. The second you see that 5-minute candle go blue, go in. Right.
And you had your 150-point trade, right?
I did really, really well with it, but I think I get a little lost in the sauce where it's like, okay, it didn't hit the equilibrium. Like, shouldn't I wait until it touches these points, right? Like,
again, they're POIs. They don't have to be exact, but you have the understanding of position means a lot. Where are we in this discount range? We're in premium, right? It still hasn't fallen below this equilibrium, so it's not even in the discount of the discount. Right, it's not there. So our understanding is it still has a lot of time to get up here again. So if you understand, only take your trades here or here, you're never gonna get lost in the sauce, unless you're greedy like me and fuck it up, right? Which that's my goal to work on, right? So
I got taken out on the trade by buying at point A at the top, and there was no more liquidity. You know, it was like, and then it fell right after.
No, exactly.
I bought in.
That's exactly what happens, right? So again, this is Asia session, right? So we'll go back to the hour, right? And we know Asia session happens, and we're gonna look into the Wednesday now, right? Tuesday. I'm sorry. Okay, what happens, right? It hits that equilibrium again and responds. This is still range. Oh, you wanna make it even more what is it? Look into, like, magnify it? Well, okay.
Right. You can
What's the discounted premium of this range?
Yeah.
Right? So if you understand, hey, now it's in the premium before midnight, right? Where is it? What's gonna happen? What do I look for? And now this works in like the minute, and the 5, and the minutes, but again, we're still looking at A and B in the premium range of this discount until it breaks this equilibrium, right? We have to understand that. We have to look. Let me move this back a little bit, right? Yeah. And the reason why you would also take this trade is because it's also the equilibrium of the bigger range, right? So it takes up. But
and does the bigger range hold more clout?
I mean,
like the hour holds more clout.
I mean, because like again, there's a lot of movement there, right? It had to break a big range, right? So there's something here, but if you didn't know that was a bigger range, if you didn't do your due diligence and move backwards, you would never know that. You would never know why you should take that trade take that short, right? So, okay, as we understand that, we'll start moving things around, right, for this week. We'll move it. And this is what I've been using all week, right? Okay, so let's take a look at it. We have another box. Right, let's change this color so it's more obnoxious. Okay, so we have another box, premium, of this premium and discount of this discount, right? So now it's in this premium of this discount.
Yeah.
Hope you guys follow, right? So if we go into it and we're looking at the next 9 o'clock, right? So it's the 9th, our next 9 o'clock, 9:30 area. If I go into the 15 minute, that's wrong. Okay, is there. So it's, remember, Asia, London creates a low. Where's the low at that equilibrium of this discounted range, right? Let's move it along. What happens? Tuesday, it plays, but what do we see? Before 9:30, right here, what happens? It's close to point A, right? So again, where are we looking? We can look at three different things here. A, equilibrium here. B, or C. Correct?
I mean, C, I feel like you missed the move, right? Like, if it's going to go down with the C. Like,
It can happen, right?
it
can happen. Right. So what happens?
Hey, there you go.
Oh, equilibrium. Right?
Equilibrium
At 9:30, equilibrium on the
top.
previous day high, where I took
Right.
my trade. Right?
Okay.
That reaction in the 15 minutes, that was way more than enough time to get into this trade. Way more. Right? And as soon as this was down here, I had a break even. And where was my take profit? C.
Mhm.
Let's see what happens.
You're dead.
Let's see what happens. I don't know. Huh? Did it hit C? Yeah, it hit C. And this is where, if you go back to that Wednesday, and you'll hear me say, FOMO is real. FOMO is real. This is what I'm saying, because it came all the way down here. But now, what do we know? What do we know from this? If we look at the bigger picture, whoops, Z, escape. Okay, if we look at the bigger picture, okay, where are we in price? We're in the discount.
Yeah. Of the big range.
Of the big range. We were in the premium. We were in the premium of this range.
Mid-range. And then
but now where are we? We are now in the discount. So if we're in the discount, where are our next areas of interest? Right? Our next areas of interest, if we break it down again, let's make this another obnoxious color. Let's go green, purple. Yes, purple. All right. So if we understand, where's our areas of interest here? A, B, C. Right? Let's go back to the 15-minute range. This is just all rudimentary shapes and figures. I have not talked about one fair value gap. I've only talked about I have one fair value gap and one breaker block, right? But okay, where is our points of interest? We're in the discount now of this discount range, right? Of this encapsulated discount range. Where are we looking at?
Man.
Oh, there's that reply here. But KJ, I'm too scared. What are you scared of? Take your trade, put your stop loss here. That's it.
Right. Because, like, you were wrong. You were wrong with you.
That's it. That's all you gotta do.
Yeah, because, like, my trades, I've been trying to do my, like, stop losses at, like, $50 and I'm getting taken out like immediately.
Mm-hmm.
And then I'm like, all right, I'm already down $50.
But do you see how we build the week? We build the week, we build it up, and it changes with the week going, right? Like a lot of us are just looking at that hour, that 10 minutes, that 15 minutes, that 1 minute, that 5 minute. Look at the overall encompassing picture. Look at the book before looking at the pages. Look at the chapters, then look at the notes. Or like if it was a book, look at the cover. Open the book. Look at the pages. In the pages, look at the chapters. In the chapters, look at the paragraphs. In the paragraphs, look at the words. It's a big book that we have to kind of decipher. But if we're just looking at the words, if we're just looking at the sentence before the word, we don't really have an over-encompassing view of how the market looks and works, right? So if we look at this and we see, hey, here's our point of interest here, C, right? It already passed A, it already passed B, like there was no stopping at B. Jacob, you said something? Say it again. This is absolutely not. It's TV. Okay, so look. There it goes. We're out. Okay. Let's see what happens, right? It comes out of it. We lose maybe 1,000, who knows, or like 50. We wait. I forgot how bad this was. Let's see. Was this Wednesday? No, this is... Oh, this was Tuesday. This was Tuesday. Okay. So let's see. Wow. Okay, anyways, hopefully everyone was writing that. I was wrong here. It creates something new. It creates another range. A to B. Right? So what do? We kind of have to make sure that we don't automatically remove the other range, but we create another one let me make it more. We create another range. Again, this is just boxes, guys. This is not anything, right? All right. Let's see where this goes.
May I ask a question?
Ask questions.
So I think the concept of nested ranges here is so interesting, but as you're drawing it right now, this was the question I've been thinking of for a few minutes. So you're drawing it right now, so I figured I'd ask it.
Yeah.
As we have these like nested ranges here, and you have equilibriums that don't match up to each other, how do you end up determining which one is the more dominant equilibrium?
So dominant equilibrium is always the bigger range. Right. Dominant equilibrium is always a bigger range. That doesn't mean that these equilibriums are still nothing to laugh at, because there'll still be a reply there. In the more advanced part of it is, when you're looking at this, what does this equilibrium mean? All it means is there's a fair value gap breaker block there, right? Fair value breaker block, fair value gap. But equilibrium, right? Breaker block, fair value gap, equilibrium. It's just a better way of kind of not looking at the chart in a candlestick pattern, but looking at overall progression in time, right? If we understand that this is where it stops, and a lot of people, this would be our trade, and a lot of people would be done, the range is built. But if you're not done, where are we going to be looking? We have to understand, where should we be looking at now? So, because a lot of people from everyone private messages me, DMs me throughout the day. And my whole thing with people is that a lot of you get confused halfway through something. Meaning, they're like, I got it right. I got the range right. I know when to take the trade, but it took me out. Or I knew when to take this. It went exactly where I wanted it to go, but it took me out. or I was totally wrong. I didn't know where the range was. I was lost. I hear this on a daily basis. And the reason why I'm telling this to you now, right, where I didn't bring this up, is because like I think it's something rudimentary that will help us determine, like, this should be lesson 101. This should be our here's what our book cover looks like, so that we understand trend, right? Because without it, all the other nonsense, our models, our fair value gaps, our breaker blocks, our nonsense here, liquidity, previous day highs, lows, whatever, means absolutely nothing if we can't determine where our range is. You know what I mean? Mm-hmm. One shouldn't take out the other. It's always going to be there. This equilibrium here isn't gone. This equilibrium here isn't gone. But at least when you draw it, right, you have a sense of where should I be looking at our POI, and stop being antsy that you'd missed the trade. It's okay. Right? Because again, another thing about a lot of people messaging me, they're like, oh, I missed the trade, the FOMO. I could have done this, I would have done this, I should have done this, I had this. This market will go on long after we're all dead. These moves will make fortunes for a lot of people. But will they understand when to hold or when to take a trade, right? When to be like really understanding of where's the equilibrium? Where's the highs? Where's the lows, right? Where should we look at it? And in this case, if we dissect it, once it makes a range, we can understand it more, right? Like, just because this is the new range, we can still dissect this even more, right? By looking at where's our other POIs that we should look at, right? Within this A, B, and C, right? So we can reply to it. We can understand, hey, when should we literally go there? And when should we not trade? Right? It just doesn't mean that one should be overall. Like, I remember when my uncle used to show me this, right? Or not my uncle, my uncle's friend used to show me this. His chart was all POI lines. And he was very successful. He could not explain to me why POI lines were the thing he used. But he never erased one. He never erased one POI line. What does that mean? He had millions of lines in his chart. It looked like a notebook with scribbles on it, and I could not decipher it. But looking back at it, I understand why now. Why? His lines are our POI lines like this. His lines are literally this. But it was lines. Could he tell me why he did it? Absolutely not. Could he tell me why that he had those lines? Absolutely not. He just knew those lines were important. But to me, they look like lines. But here, to my understanding, we understand that if we break things down easier, we can take trades easier. We take reactions to this, right? This little reaction on a 15-minute on an equilibrium is still 100 points. That's all you need for the day, right? If we keep on looking at it, right, it passes. Now we want to see, after it passes, where's the reply? We go shorter. We go to the 5-minute. Right? Like, you may have been in this thing here, or break even. Who cares? But there's time. There's literally 15 minutes worth of time for you to take that trade. Now it passes. We look for a reply. We look for what happens next. It stays up. You take the trade. Right? It's okay. Then you're out. Where's the reply? 3 bars in the front? Okay. Might want to take a trade down to this equilibrium. But again, this is way after, I don't recommend trading in the afternoon. Okay. See? So that liquidity in the market is really easier for us to understand because it takes that trade and it builds it. But again, in the afternoon, I find that you must have huge stop losses just to be able to be like make some profit. But if you understand what that trend is, or you understand where you're going to be able to catch these trades really easily. And I think like I've been doing it all month, right? Breaking it down, understanding where we are. Now we're in the premium of this range, right? If we stay up in this premium overnight, I want it, or I would think that it would at least hit this premium again, or this equilibrium again. Right, so 4 p.m. happens, right, stays above, or plays within that equilibrium here, all day. Let me go to 15 minutes because this is tiring, pressing this button. Right, it goes there for most of the day, for overnight. Okay. And what happens? Before 9 o'clock, it reaches the equilibrium of this discounted range. Right?
The bigger one, yeah.
So what happens? This over here, this area here is what? It's below them, that huge range. It's still discounted. It's still trying to fight its way back up. Right? Into this other range. Into this equilibrium. Okay? And this is, I'm trying not to make everyone confused because like this is the way my brain processes it, right? So if it's in this premium of this range, of this discounted range, I'm only interested in it breaking this equilibrium to go up. That's all I'm interested in. So there it is.
And
right?
what if you wanted to break the new high, or are you're confident with the equilibrium of the larger range?
I'm confident with the equilibrium, and it does break the high, right? It breaks the high of that discounted range, right? It tries to attempt it, and you want to see where it comes back to and goes up, right? And it stays up. Perfect, right? We want to see where it goes. We want to see like its reaction time. You have like 30 minutes of profit. Okay. Still within the equilibrium, you know? And the thing is like I'm showing it real fast, but the time frame it takes you to get out of that trade is pretty easy to make it at least break even. And remember, you're going to probably break even more often than a lot of traders. Breaking even, there's no shame in it. But when you catch it correctly and it goes your way, break even is the least thing you have to worry about, right? But this allows a lot of time for you to make trades. You know,
And we go through the week and just look at the kill zone.
yeah,
Like
absolutely.
just because I'm like, it's great to look at the whole day, but like, you know, I think where I get a little lost in the sauce too is like, you know, we're like, it's like live, the candles are forming. We really, you know, we have, or if I feel like I only have an hour, you know, it's like,
Well, yeah.
I think it's another thing where I have trouble like trusting and knowing when to get in because like it's just that small time frame and like
But it's
not all
not-
these moves.
It's not too much of a problem to look at it, right? It's like, let's take a look at this Wednesday, right? Let's did I do something here? Let's take a look at this Wednesday. If you're awake at 7 o'clock, right, Eastern Standard, right, and you see it hit that equilibrium, right, where's the next place you wanted to see it hit? The high, right? Does it? If we look at 9:30. It attempts to hit the high and hits the high. That alone is our trade, right? But where does it want to go, right? It wants to go and meet the previous day equal highs as well, or equal highs. But that's not what you have to worry about. You have to worry about, hey, I understood that it already went below to the equilibrium of this range, of this discounted range, right? Again, like I'm trying not to make it as confusing, right? So when I say that, okay. So again, when I say that, this is the huger range, premium, discount. This is the discount of the range, premium, discount, right?
Mhm.
So we understand that it already hit the equilibrium before we even started the day, and it started moving up, right? Just like when we do our previous day high, lows, and midnight opens, right? We understand that those are points of interest, right? Sometimes they reach the previous day high, sometimes reach equilibrium. But knowing that it already hit this and stopped and went up, we can assume, right, that it's going to try to hit the equal highs, but also the equilibrium, which it does. You take the trade, you're out, you're happy, right? Once it eats that, and this is like one of our models, right? Once it takes out a liquidity sweep right here, it's going to move around. And I guarantee you that's 10 o'clock, which it is. 10:15 replies.
You catch it either way, right?
Right.
Catch it going up, going down.
And
either
then
way.
now, where does it go? It goes to the same equilibrium here. That's the range. A to B, B to B to A to B.
Mhm.
Right? And then, okay, here's the reply. Now it's in the discount of the discount. Right?
Yeah, I think I have a hard time sometimes waiting for the retest. Like, it's like, I think when looking at this, I would rather catch it on the way down than catch it on the way
mean, absolutely. And I think that's what I did that Wednesday, is catch it on the way down.
Yeah.
Right? But again, it went to where it passed the equilibrium, and it's on the discount of this discount, right? Discount of this discount, and we're looking at to reach here, right? Take your profit anytime. What happens? Huh? It goes past equilibrium, and then the reply is, "Oh, there's not enough strength in the equilibrium. Let's go back down." Remember, it has to grab some sort of liquidity to go back to where it has to go, right? So, which it does.
Right. That's where I'm like, all right, like even in that last example, you see that one candle, it's breaking the equilibrium.
Mm-hmm.
You're going to want to take that long,
Mm-hmm.
but then it doesn't totally reject, but like, there's better moves to be made, right? And that's where I think I get a little lost in the sauce, where I'm like, all right, let's go. It's breaking the equilibrium. Let's get in on a long. And then there it goes. You got 4 candles coming back down, taking out my stop loss 100%, and then going in the direction that you want it to go.
Yeah, but again, that's what I'm saying, right? Like, if you understand that that's where you shouldn't be taking a trade willy-nilly, right?
Mm-hmm.
You're taking the trade only where A, B, that's it, right? A or B, right? So if we understand that, we can take trades based off of that. Sometimes just take the trades at the ends. Maybe you have to take the trades in the middle.
Yeah.
Right? If you took a trade here, look how much you made. If you take a trade here, right? Look how much you made.
Yeah, and I guess like equilibrium is what feels best, right? Like, because it's like once it gets to the
equilibrium
top,
feels best for everybody, right? But sometimes that's where the chop is. That's the equilibrium.
Yeah.
That's where the chop is. Like here and here at the ends are the best places to take the trades.
right?
Right?
Now you, see the reaction. It's going up, and you're risking a lot less,
A lot less.
and then probably just out at equilibrium, and then you're good.
Exactly. So, like, when you have that reply, because what happens? Here's the equilibrium of the bigger range, but it's, and guess what? Boom! You barely a stop loss there before you make like 8 times to 10 times your thing, right? I think, and I was talking to Brian, right? Like the other day, I had 6K before 10:30 because I was taking trades only here, only there. That's it. I was taking trades at the ends. And I would add more. And that's my problem. I shouldn't need to add more. But I add more. But
No, I did that this week too. I
But
had a
if
great
you-
trade, and I just gave it all.
That's what I'm saying. So, but like, do you see like if you're able to encapsulate it, if you're able to move it to a point where you can see the bigger picture, you're never going to get lost in the sauce. You're never going to be like, oh, it went against me, or my stop loss was here, right? Right now, where are we looking at? Okay, like let's take this out so that it doesn't get as convoluted, right? So we're in the discount. It's trying to reach this equilibrium. Correct?
Right.
It's trying to reach this equilibrium on a Thursday. And it can't. It reaches that equilibrium really briefly and dies at 9:30. So if we're looking at the next morning open, right? It stays, reaches that 9:30 and dies. That's your trade. And that's not a trade to even be like, oh, that's a little trade. In the grand scheme of things, even if you got into the middle of it, that's still 300 points. That's a
Now,
lot.
were you waiting, like that black candle that hit equilibrium, right? Are you waiting for that candle to close?
Well, you'd be in the 5 minutes, right?
You're like...
Oh, that's 3 minutes. That would be on the 5 minute. Right?
Yeah.
Hits the equilibrium, close, enter.
Yeah, okay.
Stop loss is right here.
Yeah, the 15
enter.
and the 5. That's good.
There's your trade before kill zone's over. Right? And like even if you're like shy and you just got up to here, that's still 200 points. And I think that was the trade you took. Right?
Good bait.
So
My first trades have been taking me out, so I'm like
Yeah.
starting the day basically
because you're
minus
antsy,
50.
because you're antsy.
Mentally at work.
And I get it because I'm antsy. You're not the only one antsy. I'm antsy, and like Breon's antsy, and like I hear it from everybody. Everyone's antsy, but like build it up, build the whole entire encompassing thing, right? Right. It's what we have to determine. The premium discount really is a powerful thing because it helps us determine where we should be looking, right? And then we finish it. Who cares about whatever happens to the rest of the day? Let it build. Let it show us what it wants to do. Right? Back to equilibrium. What happens? Right? Back to equilibrium. Here's the reply. Boom, boom, boom. Take your trade.
I want
Take your
that.
trade. Right? But I think this happened really quickly. Like it wasn't even
So
like
that's all I'm saying, right? That engulfed all that.
everything.
And then,
But you already made your profit in the morning.
Right.
But this is afternoon trading. If you're here in the afternoon, maybe you should stop trading. Right? But again, that is our thing, right? So like if we look at it and we're like, oh, okay, well, we understand the bigger premium discount. Right? And end of the day, we're like, oh, well, we can expand it to this whole entire range now. Right? We want to look at where it reaches the equilibrium here. Right? So let's make it bigger. Let me, oops, not that. Okay. And we'll go into Friday, the 12th. Right? 15 minutes, because this is killing me. 15 minutes. Right? Where is that? Equilibrium
Real.
of the bigger range. No?
Yep.
Okay. Passes the equilibrium. But again, that's 30 minutes worth of profit. Could have made it.
Right.
But again, we're not awake at that time. This is like way past time. Or way past our
Reading that.
when we should be trading. Okay. So again, let's take a look at it. And we're going to take a look at it going overnight. And our next morning is for Friday, 9:30 around here, right?
That's today.
That's today, for today.
Did anyone trade today?
I trade options and I made $2. Oh no, I made $140. That's it. Which is fine.
I don't like Fridays.
Yeah.
Yeah, I don't usually trade either.
I'm not a big. I wasn't a big fan today because it's SpaceX. I wasn't gonna. All right, so
Fridays and Mondays are like. I can deal with not trading those days.
again, what happens here? Equilibrium, right? kind of has a rough time, and London starts going down. And back up to where? Equilibrium, where there's another reaction. And here it goes to equal highs of that. Equilibrium. Alright.
Look at all these equal highs.
And then 9:30. The reaction time at the equilibrium. Down. To where? Here. But we also want it, if we kind of look at it that way too. Let's erase that. We want to take a look at here. Okay. Right. So now it breaks this. It breaks this discount and is now well off. This candle takes out CISD. We're looking at this candle, right? Mm-hmm. So now we're looking at premiums. Okay. Will it go past up to here? I don't know, but we'll see. I wasn't really paying attention today. Nope. $1:00, still nothing. This is the day where you don't trade, or you trade and try not to trade as much anymore. Right? That's it. Right? So it breaks the premium, it breaks the equilibrium into the premium. So for Monday or Sunday, I would think that it'll try to reach up here by the end of the week. But again, if you break down stuff, if you break down anything, that should be something you're doing throughout the week, dynamically. And it just helps you not get confused, right? So if you're looking back into this, how many really good trades would we had this week? We would have had a ton of good trades, just by like understanding premium and discount in the multitudes that and encapsulations that it has, the rudimentary way we can look at it, right? Don't worry about fair value gaps. Don't worry about this. Look at where or how it looks, right? Look at where it looks like let's take a look at like, what would I do? Okay, SpaceX sucks ass. If we look at the hour, right, and we take away, we'll take away all this stuff, right? Hold on.
You could also do it. You could also get a sense of the week by doing the. I have it actually marked on my thing. Like we're in the premium right now.
Mm-hmm. Correct.
Of the daily.
Mm-hmm.
So if you mark that range on the daily chart, we just closed today in the premium, and we have a swing point right there that was in a fair value gap that we reacted off of earlier this week.
Tell us.
So,
I don't know what you're talking about.
Right, let me just finish my train of thought here before anything. Okay, so we have that range, right? We have that range. We have the overall picture of that range, right? For most of the week, and when I say most of the week, starting here on Sunday, right? From where's Sunday? From here to there, that's the week, right? Where was price overall
In
discount? Price was in discount of the bigger range all week, and it fought itself to get where? To the equilibrium. That's it. That's all it did. Right? And then if we break down the discount, right, and let me make the lines darker. Oh, that's not how you do it. Damn it. How do I make the middle line bigger, darker? Style, middle line. Okay. Overkill, but okay. You'll get the picture. All right. It only every time it replied, where? Equilibrium. Right? Every trade that you could have made in the equilibrium for most of the week. Granted, these are really bad wicks, right? But where for most of the week, like the beginning of the week, it was in the premium of the discounted zone. Middle of the week, Tuesday, Wednesday, Thursday, it was in the discount of the discount. And then Thursday into Friday, it was in the premium, just so that it can match up to the equilibrium here. Right? That's it. Break it down. That's what I'm trying to say to you. Like, you're gonna see your game kind of change knowingly by breaking down what or where price is. You know, you're not going to get lost in the sauce, right? Like, I think in the mornings, automatically when I started taking trades, I was like, I knew, hey, this is where I'm going to be looking and making my trades. And then it would move up there, and as soon as it moved, I'm like, okay, this is where I need to be. This is there. Like in the mornings, if you understood on Tuesday morning, hey, you know, this is going to be a new low, but you already caught this high, right? Because of this equilibrium, you caught it, right up here. You made a ton of profit, and you're done for the day. But this rejection here should automatically be like, this is something we have to look for again. And when it does, right here, we have to look for that reaction here to do what? This is Wednesday afternoon, Asia session, all night until the next morning, right? Then we look where? Here. If it passes the equilibrium, we want it to reach like this equilibrium, which it does. Friday, all range. If you made a profit, good. But today was a shitty day because, you know, you have to understand also the background of what's happening in the market, which is also SpaceX's shitty IPO. Right? So take that.
I think the range too is like the marking the ranges are basically the premium discount is watching those big swing points. Like Wednesday, was it Wednesday that had that big drop? No,
Tuesday. Mm-hmm.
Tuesday. So from there, if you do a range from there, from that top to that bottom,
yeah,
it creates a whole nother premium discount.
Absolutely.
And if you mark it, you'll see the reaction at the equilibrium.
Yeah, absolutely. So again, like anytime a big range happens or a big move happens, it's a great way to market. Right? It kind of makes it even better looking, right? No? Yes?
Literally.
Right? So anytime a big range happens, it helps you out just to mark that range. It helps you out. And I know Brian wants to like say something, but like I'm not letting him. So
and you could have marked the fib there too.
But you understand?
You know, it's a lot of.
But you understand? There's a lot of things. But besides the advanced stuff, everyone's forgetting the rudimentary stuff.
Yeah.
You understand? I don't
Can
care.
You show us
I'm sorry. So hold on. Let me just make this smaller because now it's obnoxious to me now. Okay. Show you the 15 minutes on this? Sure.
I just want to see the 15 minute with these lines that you should put one up. Okay.
See? You knew. I mean, this I caught like on the dot, right? For this, but okay, it creates this range. Here's the equilibrium. Here's the equilibrium. Where does it go? Exactly where this was before, and it revisits it. Once this passes with this huge fair value gap right here, you're gonna want it to revisit here and take the trade up. And you see it all the time. You know. the Friday is just shit. This is just shit. I would never trade this. Like, I'd probably get lost in it. But
I'm glad I did it.
you know? But again, that's what we have to look for, right? What I'm trying to do tonight is just to make sure that, like last week, the ranges were just perfect. I caught every single trade last week, right? But you know, everyone's fighting their demons, including me, right? It's over trading, overdoing things, and coming in and not looking at ranges and YOLOing based on guesses and based on wishes and based on stuff like that, right? But
that's my big problem.
like you come back in the afternoon.
I'm actually in a pickle right now.
You come back.
I'm
Why?
actually in a pickle.
Why?
I need like 1,200 to pass my
Your account.
My thing, yeah, but my account is on Monday, my last day basically, and I hate trading Monday, so I'm gonna have to trade Monday.
I mean, is it your last day before it renews, or is it the last day before you have to get a new account? This is the legacy accounts, right?
Yeah.
Okay, because the new accounts you can't renew it. The new stuff you can't.
No, that's what I mean. It's the new account.
Okay. So YOLO it.
So if I don't pass it, it's just gonna. No, I am. I'm definitely gonna.
But take into account what I just taught you, and I guarantee you, Ray, if you have that have this in the back of your mind, your game's gonna change. Because this is what I taught myself in the beginning. And from the time that I lost my accounts to now, not even now, like maybe 2 weeks ago, 3 weeks ago, I was like, I forgot what this was. And retesting it now, like this week, retesting it and going over it and going, this shit works. But then being obnoxious and taking more trades than I need to trade when I already made profit is a bad thing that I'm trying to get rid of, right? And Breon, I tell Breon, I guarantee you, he's my psychiatrist. I just stand like, Breon, I fucked that up. I was already up this much. I lost this much
because me. I would have passed if I could have just walked away like 2 or 3 days end of the week. I could have just I would have been done.
Right? So,
but it's bad, man. I'm gonna beat myself up.
I hope this helps. Right, because again, I find it that a lot of people are forgetting the rudimentary basics. This is the basics, including myself. I'm in that group, right? All right, I have 5 more minutes. Questions, Breon? Questions? I know you have them.
Nah, I'm actually pretty good. I've been using ranges a lot recently too. I just don't like nest them as much as you. I try to keep it like 2 max. But no, yeah. Ever since I started incorporating it, I've definitely seen a shift.
A shift, right?
In terms of my ability to choose like the right direction.
Was that because I mentioned it before?
No. It's just I actually stumbled across it by accident, and I'm like, hold up a minute. Like this is actually working a bit, and then
because it gives you more insight on what's going to happen, right? So
yeah.
But again, I'll record this, and hopefully, this will be something that we can all use, and then come back to when we forget to do ranges again, because we're all going to forget to do ranges. And those of you who aren't trading, and are going to trade or learning to trade or coming back to trading, put this in your repertoire, and you're gonna find yourself doing it better and better. Yeah. So that's all. I really miss our times speaking. I'm going to stop recording.